We've seen a solid return in the last quarter, in particular the last 6 months across all the options. The My Super option returned 1.91. And really what we've seen in the last quarter and the last 6 months is a good recovery in member balances, particularly after the outbreak of COVID-19 in February and March. The strong performance has actually been in the international shares. International shares have had a very good return, particularly our option driven by a little bit of hedging and the rising markets. But we've seen pretty good returns across the asset classes. As we speak today, October's continuing that trend for Australian shares and international shares. So the theme remains that since March, we're seeing a pretty good recovery in markets, really driven off the back of the measures taken for lower interest rates and the stimulus around the world. We expect the Australian economy to hopefully improve as restrictions are being eased throughout Australia, as cases are falling and we're seeing the economy coming back to life. Against that positive outlook, we do have an issue in the Northern Hemisphere. We're seeing rising cases and unfortunately lockdown measures in many other countries as they're going through the Northern Hemisphere winter. So the key here is for Australia to continue on its recovery as restrictions are being eased, and hopefully the Northern Hemisphere gets through this winter with not too much impact on their economies due to the outbreak. As we've always said in our quarterlies, we are big believers in running diversified portfolios, and whether it's a pandemic or a crisis, we think the key is to be broadly diversified and not be impacted by any one asset class. We continue to share that philosophy and belief even today. US election coming up in early November may have an impact on the markets. Last time we saw this in 2016, the market did move a lot in a couple of days. It priced in a Clinton victory and then obviously Trump had won. Again, we're in this outbreak with COVID-19 plus an election, and whether it's Biden or Trump, we frankly do not know. And so we should expect some short-term volatility coming into this, but it really is unpredictable. Very important that the recent budget was all about spending into the economy, and spending was through infrastructure spending, through tax cuts. The federal government can do more. The Reserve Bank has also announced lower for longer interest rates, and this is really all about the unemployment rate going down. The unemployment rate falling, the economic growth will improve, and therefore the economy recovers nicely. The government may do more, depending on how we go through these restrictions as they're being eased, but we think this is net positive. The recently announced budget should be supportive for the economy and therefore markets. Hence, all things being equal, we think the recently announced budget will improve the conditions in the economy and generate better returns for our members going forward.